G'day everyone, welcome to this weekly update for Australian and global stocks for the 31st of August. And the amazing rally in America continues. We had a couple of weeks of down. We got down to an area that I thought might be support, but I thought there was at least a 50-50 chance that we would perhaps head a bit lower, but that hasn't been the case. The American market has just turned around and done what it's done pretty much for the last couple of years, and just rebounded after a very, very simple single phase decline. So it's all looking pretty good at the moment, and we've got through a period of the year which is typically a little bit weaker, and we've got through it pretty well. So let's have a look at the details of how things have unfolded over the last week or two. The S&P index last week ended up gaining 15 points, and despite the fact that we've got all sorts of potential triggers with Russia and the Middle East, the market just keeps marching on and closed at a new all-time closing high above 2,000 points. So extremely positive. Now the index is extended a fair way above the mean, and that always has me alert for signals that there might be some weakness, but there just aren't any at the moment. And all the people that are saying the US market is overvalued and it must fall, just basically going on the fact that it's been going up for a long time, and that's hardly a good reason. You've got to look at value, you've got to look at relative investment returns, and there is still terrific value, and on a relative return basis it's still all pretty good in America. Just quickly, the Australian index, the ASX 200 ended up down 20 points on the week, but look, that was really about BHP and Rio and some of the other major mining stocks. They were the big drag, thanks to iron ore basically declining, and a little bit of weakness also in the energy sector, so that dragged down stocks like Woodside. I have to say though that the reporting season in Australia, which is basically wrapped up now, did exceed expectations, and that was a bit of a surprise. And there's been some quite significant gains in individual stocks that performed better than was expected, and even some stocks actually recorded a loss, but that loss was less than what was expected. So all in all, a surprisingly good Australian reporting season. But having said that, the Australian economy still has plenty of headwinds, and I really think that a lot of companies that are relying totally on growth in Australia are going to continue to struggle. Let's have a look at the S&P 500 index. There we go. This little green box here shows you the first area that I thought would be support. That's where the index got down to. Just got down to the top end of that area, and then just a straight rebound, went straight back up. And I think I said 2 weeks ago that the way that the rebound was unfolding, it was quite likely that we'd see the bottom in the correction. That's proved to be the case. It's continued to march on, and as you can see, we had a pretty positive finish on Friday night, closing right on the absolute highs and a new all-time closing high. Now, it's not just the S&P. If you also look at the Russell 2000, then it's still within a band, and it's not as strong as the S&P. You can see rather than new highs, it's basically forming a big consolidation, but again there is no signs of weakness. The moving average, yes, is flattened out, but the price is only underneath that moving average for a very brief period of time. You look at the ranges on the daily candles, and the ranges are basically pretty normal. They're fairly small. So there's no indication yet that there's a significant sell-off occurring in the US market. Turning to the Australian market just quickly, we've had quite a nice rebound over the last 2 to 3 weeks, but the last week in Australia we had the banks going up and the miners going down, and as a result the ASX 200 index just basically went sideways. So not a lot happening there. Turning to commodities, gold ended up $7 higher for the week. It's still holding the uptrend line within an overall phase 1 base, so I'm still very hopeful that we will see a breakout into a new phase 2 bull market for gold in the not too distant future. It was a strong week for gold stocks, however, and the GDX and GDXJ indexes did much better than the price of gold and also outperformed the S&P, and we'll have a look at those spread charts in just a minute. Silver's still lagging, which is unusual, and that suggests to me that we might just have a little bit further to go in this basing process, because silver would normally be doing much better at this stage. Copper kicked up a little bit in the last 2 weeks, back up to $3.19, and crude oil, a bit volatile, but ended up finishing at $97 for the week. There's the spot copper chart, still within that overall range. So let's look at gold and silver. This is the gold chart on a weekly basis, so you can see we've got this phase 1 base between broadly 1200 and about 1400, give or take a bit. But within that you can see we've got a definite uptrend happening. Now until this trend line gets broken, then this is still holding as an uptrend within that overall range. So what we're looking for though is a break of 1440 will be the definitive area that we're looking for. Turning now to the GDX index, you can see we had quite a good rebound last week despite the fact that gold didn't do all that much. And if you look at the actual spread between, this is the spread between gold and gold stocks, and you can see when this line starts to head up, as it is, the moving average is now turned around and is now pointing up, and the value of this ratio is consistently above that moving average, then that's indicating that gold stocks are doing better than the price of gold, and that generally is a precursor to a new bull market in gold stocks. So it's underway, it's temporary, it's tentative, it might take a few more months to really get into its stride, but it's definitely there. The other indicator I look at is the ratio between the GDX index and the S&P 500. And again, gold stocks will tend to lead the S&P 500 as we go into a new bull market. You can see we've topped out now. The moving average is turned over. The ratio is not really spending that much time underneath, though it's still early days. But at least the moving average now is turned over, so I think we're in the late stages of this reversing, and gold stocks are going to start to outperform the rest of the S&P index, and that's a pretty positive sign. Turning to the overall strategy approach you should be taking, August and September are generally the weakest times of the month. We've got through August unscathed. In fact, we've got through August pretty well. Still got to get through September until we get into a more robust, positive time of the year. There's plenty of triggers out there with Ukraine, Middle East, a few concerns about what's happening with China. So we could just see some more volatility during September. But the current strength, the way that we've got through August, fills me with a great deal of confidence about how things are going to go into the end of the year. So I remain extremely positive on that score. However, still a time for a bit of caution. A bit of smart positioning is always a good thing, and as I encourage all members of Special Share, your activity in the market does not equate to profit. Waiting for good entries is the best thing that you can do, and if you're heavily in cash, there's actually nothing wrong with that as long as you're not missing out on good opportunities. And at the moment in the Australian market, there's not a lot of value. There's a few opportunities, but not too many. A lot more in the States, that's for sure. But a bit more difficult in Australia. So that's where we are in terms of rundown on the Australian and global markets. For anyone that is interested in, who's a non-member of Special Share Education, that would like to chat with me and have a bit more information about how we do things, then there's the website address and my contact details as well. That's it for this week. Cheers.